So this is called an impulse wave. You have and it comes in waves of fives. Nowadays, you have three wave impulse, and I find that those come in corrective waves. So this will be the simplest wave count you can draw out, and they're really easy to spot. And I'll show you an example. I was trying to find one earlier and I found one. It's right here. The simplest one I could find. Let me zoom in on that. All right, right here. This is it. This is the simplest impulse wave I can find. Unfortunately, they don't look as good, quite as good as the chart looks, but a few ways that you can kind of identify them are here, right? This would be your wave one. And how we know this is, how we find wave two is usually I find you'll pull up your fibs, right? You got your fibs. You'll map the bottom of the top, bottom to the top, and where it bounces, usually, not all the time, but the majority of the time, wave two bounces off of the 618 retracement. So this is where we would draw our wave two. Now we have a 2 to 3 would be from from the bottom of here to the top of here, right? This is how we would get our wave 3. Now how we get our wave 4 is we draw the fib from the bottom to the top and here, right? Perfect. Fourth wave usually bounces off around the 50% retracement, and that's how you find it. And then now this is a little bit weird because um, wave 1 and wave 5 will usually be around the same length, right? This isn't really the same length. This is way more massive. And I like to think that and it's based off of the term of the price movement, right? So if you have a $30 move from the bottom to the top, you'll probably have a $30 move from the bottom to the top for wave 5. Now, sometimes you do get an extended wave 5. And it's not very often, but it does happen. So this would be a 1 through 5 impulse wave. Now there's a couple set of rules that I like to I'd have to mention that kind of keeps you grounded. That way you don't get like confused about when you have an impulse wave. And the first rule is, I don't know if you guys want to take notes or whatever. I'm recording this so you'll be able to come back and look at it. The first rule is wave. Hold on, let me find it. I want to draw. So wave 2 cannot fall below the low of wave 1, right? So if wave 2 falls below this, then you don't have a 1 through 5 impulse wave. Same thing for 4, right? Wave 4 cannot fall below the high that wave 1 created. So this is the high of wave 1. If 4 drops below this high, this is not a wave count. Then you have something completely different. Now you have to like figure out what it is that you have because it's not an impulse wave. You got to figure out the correct pattern that you're in. And yeah, that's pretty much the two simplest rules that kind of give you that 1 through 5 impulse wave. Now you're thinking what comes after an impulse wave, right? What happens when you find the top of one? Or no, let's say it like this. Okay, how do you know when wave 5 is going to end, right? There's a couple of indicators. So wave 5 and wave C, which we'll get to what a C is. It's an ABC. Um, Wave 5 is usually a rising wedge. Or if it's an inverse 1 through 5 wave, because you can have an impulse wave going up or down. So, right? So, going up, how you identify the end of a wave 5 impulse or when it's going to get ready to end is it'll usually um, kind of look like a rising wedge, right? This isn't really that perfect, but this kind of gives you an idea of when you'll start your ABC correction. So what is an ABC correction, right? Let's look at
Hey,
that.
did you know that there's a pattern template that does the count on the left side? I don't know that much about this yet, but I did notice that.
Where's Oh yeah, you're talking about the indicators, right?
No. On the left, it's click on the patterns down, right up, right below the T,
Right below the T.
and then if you click on where you want one to start, and then click, and then it'll like
Oh, that's pretty cool.
yeah, it'll put the numbers of the letters in there for you.
That is pretty cool.
So like if you click on A B C D E or 1 2 3 4 5,
Yeah, I'm gonna have to play around with that.
so you don't have to like manually do it. You just click where you want each point to.
Yeah, I'll have to play around with that because it looks a little bit
Yeah, right
confusing.
there. So there's see how there's like a 1 2 3 and an A B C D E.
Okay.
So click on where you want one. Yeah, exactly.
That's pretty dope.
Yeah,
I appreciate that.
and then also because I'm like seriously just new at this, but I've been watching some videos and stuff. But there's also a magnet on the left that you click on there, and then it'll automatically lock it to the point.
Okay, okay. That's perfect.
That way, like you don't have to put text in for each count.
Gotcha, gotcha. I appreciate it.
Yeah.
That's perfect. Okay. All right. So what comes next after a 1 through 5 impulse wave is usually your corrective wave, which is this, right? You have an A, B, C. And sometimes you have a D and E, but we'll keep it simple and we'll just do A, B, C. So what generally happens with the ABC correctional wave is you get 100% retracement of the bottom of that 1 through 5 impulse wave. So you have a 1, 2, 3, 4, 5, right? And then ABC will come all the way down. You'll have your A wave, your B wave, and then your C wave. And this will usually correct 100% of that impulse wave. So what does that look like here? So we have our 1, 2, 3, 4, 5 impulse wave. Now we'll draw out our ABC, right? It's a little bit sloppy looking ABC, but it's still an ABC. Usually with your how do you find the top of that B wave? It gets so I find the B wave the easiest to map out or the easiest to play off of because once you find the bottom, you know exactly where the top is going to be, right? So this isn't very perfect, but this one kind of reached beyond it, but usually your B wave will come at the 618 retrace. That's usually what it'll come to. This one extended a little bit further. and then your C wave will end here. You've now you have a complete 1 through 5 impulse and then a full ABC correction of that impulse wave.
So where's the entry point on these?
So the best places that I recommend entry is so once you kind of get like a definitive top, right? So if you see this impulse wave up, right? And once you get that clean rejection, depending on what time frame you're looking at, um, I kind of like the 15-minute for entries and exits. Um, if you wanted to play the bottom of this wave down, this two wave, that would be a good entry right here, right?
So you're
So
gonna wait to see the bottom of wave two. You, like you said, you don't want it to go below one, or that invalidates it. Correct?
yeah, exactly. So and
So
then
you want to wait for it to turn.
if you want to get ready to go long on it, yeah, you would wait for that confirmation off the 618 to go long because you know that 3 is usually the longest wave. So once you get that
Okay.
rejection at the top here, you could play this as a short position, right? Because that's almost a $3 move. So if you wanted to, or it's more like a $2 move. That's a $2 move. So if you wanted to play like a scalp really quick, you could play that.
Right.
And then once you get that confirmation off that 618 retrace, then you have a confirmed wave two. So then
Okay.
you could play this big wave three up, right? So,
Right. Yeah.
but
And you're using extended hours?
yeah, I always use extended hours. I feel like if you don't use the extended hours, you'll get thrown way off on your wave counts. And I'll go
Okay.
to I'll will we're gonna go to futures at the end of this and kind of just see what we can see happening in real time, which is kind of why I waited to about 7 o'clock to give futures a little bit more time to play out. So
Anyway,
that's
thanks for taking the question there. I didn't want to interrupt that,
no
but
no worries. Y'all can
thank you.
chime in whenever if y'all have any questions throughout the whole thing. So don't worry about it.
All right.
So yeah, so if you like I'm playing off of his question, if you wanted to take a long position or short position here at the top of wave one, you kind of know it's going to come down the 618 retrace, and if it keeps falling, it's even better because you're in a short position here. But if you just kind of want to wait for the wave count to kind of play out a little more, you would say, okay, I'm going to enter a long position here with a very very tight stop loss, right? Because you know if it keeps falling, and if it falls below this, then this is when you note it. If it falls down below the 456, you know that's when to cut you cut your position, right? Because that's invalidated your whole thesis for taking that long position. So if you can kind of play, you can kind of play and catch the rip up here with tight stop losses. And I'll do that a lot of the times. Like if you see me enter a short or a long position, it's kind of like right at that 618 retrace, and I will have a very very tight stop loss because I know if it falls below, then it's that's not where that's not the play I was hoping it was going to play out to be. So it gets really easy once you find that bottom though. If you find that bottom and it rips above that top of that wave one, it gets really easy. Now you're in a freaking the best the best wave that you could catch is right here, that third wave. And then you
How
can
do you
kind
know
of
when it's ended, when it starts to retrace back? Or
yeah. So once you get that kind of like really confirmed, like if you like you know you wouldn't like if you have a confirmed 1 and 2, then you know that say you try to like exit your position here because you think it's gonna keep falling. Um, you're like, nah, but we kind of bounced off that, right? If we were to try to have a full, actually, we would have enough to bounce here. So how I like to think about it is, as long as we have, if I know we're in a one through, if we at least have two waves established, then we're kind of set at that point, right? So we know that wave wave four can't fall below the high that wave one created. So and we know that wave four is always going to be a 50% retrace. So if it stopped here, right? If it started getting a rejection here at the 462 instead of up here, then we know that um, this isn't looking good, right? Because once it falls below that, then we know to cut our position. Did that answer your question, kind of?
Yeah.
So, and that's really like lately these 1 through 5 impulse waves have been a lot less likely because we're kind of in a bear market. I find that the 1 through 3 impulse waves are usually more likely, which I'll get into here soon. Does anybody have any questions about the 1 through 5 and ABC correction waves? Because that's just kind of like the basics of Elliott wave theory.
No questions here.
Okay. All right. Yep. So, and wave 4 to 5 is really, really like my favorite wave to play because you already have 1, 2, 3, and 4 established, right? Because once you have that third wave established and you start getting that rejection, you know it's coming down to four. You know it's coming down to that 50%. So once you start to see that rejection happening here, you enter your short position, right? And then you get a nice drop. And if it drops below that high that wave one created, then you're just racking up money. Like you take your first trim, second trim here, and then it keeps dropping and you're still short, then you're kind of winning. And then but once you start to get that bounce here, you're short here and you start to get that bounce here, then you kind of want to enter that long position, and then you just wait to start to see that rising wedge form. Once you start to see that rising wedge form, then you kind of know to start trimming your position, setting your profit stops, because the rising wedge and the falling wedge. Oh, so the rising wedge only happens in wave five. So just remember that. So if you have a rising wedge, you're likely in a wave five. Now, that's only for the 1 through 5 impulse wave. So if you have a 1 through 3 impulse wave, then the third wave would be your rising wedge. And then in a C wave, you start to get your falling wedge usually. So it doesn't happen every time. Like here, we don't have a C forming a falling wedge. So it happens probably about 70% of the time. So, and I'd recommend if you can't count the wave, then it's not worth trading, right? If you're having a hard time figuring out where you are in the wave count, then don't even bother trying to trade it until you have a definitive like answer to what wave count you're in. Why do all my pictures keep deleting from here? So, all right, let's get into kind of like our our irregular wave counts, right? Trying to think where to start. All right, so that was our 1 through 5 impulse wave up. So we actually have a 1 through 5 impulse wave down here, right? You have your wave 1 here, and you have your wave 2, and you have your wave 3, 4, and then 5. And once you start getting into those bearish, very bearish looking waves, then you kind of know you've entered that. Like these very like sloppy, choppy charts. Like this was clean. That was a clean 1 through 5 wave count. This is really messy. And you really want to have an idea of all of the type of patterns that could play out. That way you can kind of play all of the sides. Now, this pattern here, I kind of drew this out 4 months ago, or 3 months ago, 3.5, right? This long red, and it's been that way for a couple months. We've just been tracking this this is a lot to look at, I know. This right here, don't mind those pictures. I want to, yeah, right here. Perfect. So this is a leading diagonal. This is exactly what kind of played out here, but I have it charted as a 1 through 5 leading diagonal wave, but it could easily be ABC too. So
Sorry to interrupt again here. That's TD Ameritrade platform?
this platform I'm using right here.
Yeah.
No. This is TradingView.
Okay.
Yeah, I love TradingView. I like it a lot because you can color code. I can color code my charts, which is really nice for keeping everything kind of separated.
Yeah, Dax isn't very good at his color coding. Don't tell him I said that.
He's probably listening.
Motherfucker, I heard you.
What's up, buddy?
Gotcha.
Shit.
Gotcha,
Just
bitch.
got home.
Gotcha, bitch. All right. So
Don't
Do you
let me
save
interrupt
your
and
drawings
interrupt you.
on different time frames?
what's that?
How do you save your drawings so that they're set just for different time frames?
That I don't know. So
Like
I
all
can
this
try.
popped up here based on, or is this set for shows up on every
This is
time frame?
every time frame. I think I got to look at the settings and try to figure out how I can
Yeah,
get
I
to
don't know how to do
specific.
that.
So what I really want to go over now is, which is very confusing for a lot of people, is the waves within waves, right? You can have a massive wave, and then have microwaves within those waves. So here we have a big. Oh, let me go out to the daily chart and kind of show you. Oh, let me look at the ES daily chart. Oh, wait, it's kind of. Actually, you know what I'll do?
Sorry, another tip is right click and reset. It's like,
Oh no, I don't want to. Hold on. Yeah, there we go. I don't want to reset it yet, but.
no, I mean, it just resizes it.
Oh really?
So you don't have to like keep dragging and
Oh yeah.
see
Okay,
there
gotcha.
at the top.
Gotcha. See, you smart.
Sorry, I'm telling you about all I know.
So this right here is one big wave, impulse wave, right? From the COVID lows. That's COVID. It's top of the wave. And now what we're gonna do naturally is we're gonna ABC. So this is kind of I'm just showing you this because this is kind of how I map out this is kind of where you get that big red line that I do have on that other chart. Um, like I said, you have a 1 through 5 impulse wave, and it's not really clear, but this would be 1, 2, 3, 4, 5, and usually you kind of get those full retraces, but it's not really having those full retracements right now, right? Because that was just like that pump from the bottom of COVID lows to the top of that high was just a massive like squeeze because we got 6 trillion, $8 trillion just pumped into the market. So there's no real corrections here, but every little bit, you know, I find that once you start squeezing in these squeeze plays, you kind of get support here and at the 382. So as I said before, like you get your 1 through 5 impulse wave. Now we have to correct all of that. So you get an ABC correction. And if you look here, how you find your B wave. So you chart it. Oh God, these fucking magnets.
Now, were you the one that posted earlier? You were saying SPY was going to go down to 2 something?
Yeah, 240.
And is that you're using this chart to make that analysis?
Yeah, exactly.
Okay.
Yep, yep.
So I just need to hold out till she bottoms out.
Yep. That's what my goal is. I'm buying it. I'm buying everything down here. Starter positions, leaps, everything.
Oh, if it gets that low, we're cashing or we're taking loans out.
Yeah, exactly. $100,000 loans, buying up everything. So we kind of got rejected here, right? This was a little bit like I was saying this a couple weeks ago or a couple days ago before when we were at this $453 level, right? I was like, imagine we get this massive like fake out, right? This bull trap here, and we did. Because usually on a B wave you get rejected at the 618%, but it kind of squeezed a little bit higher. That's perfect. That's kind of when I was like, oh man, maybe we are gonna go to all-time highs, and then it just goes, boom. Then we have this massive move down over the next month. Um, so that would be your A wave, your B wave, and then your C wave will end all the way down here. So that just kind of shows you like the macro view of what is going on here. Now we're on a massive C wave starting from up here at the 2B, and then it'll come all the way to 240. But pretty much charting out exactly how that wave's gonna look is the likely path of those waves is here, right? We have and this is kind of going into what I'm kind of seeing happening over the next couple of days. You have you have your wave 1 down, your wave 2 up, your wave 3 down, wave 4 up, wave 5. This is a 1 through 5 impulse wave down. Is what we're currently on. So we have the bottom of wave 1. You get that kind of 618% retrace up here. That's kind of when we went back to like the 450 area. And then now we're just kind of selling off, selling off, selling off. And sometimes you get these like relief waves in the middle, but um, what I'm kind of expecting to happen is we get that fourth wave up soon. And I really want to zoom in here and kind of show you like another corrective wave because it's all leading up to a new corrective wave that you kind of haven't seen before. I gotta find it because all my things keep deleting. Flats. So in addition to a standard ABC, you kind of have your kind of common regular waves that you'll see a lot, which is the flats and also zigzags. So let's go over what the flat kind of looks like. So this is a flat in a bull's market. You get, I wonder if I can find an example of this anywhere on here.
Hey, you said this will be available to watch later.
Yeah, yeah.
I gotta get my kids to bed, but I want to be able to watch it. Awesome.
Yeah. I'm gonna record it and I'm gonna put it on the edge of the premium strategy account or under premium strategy. So it'll be under there whenever you guys want to look at it later. All right, so we have a flat correction and we have a bull market and a flat correction and a bear market. So here's the flat correction that I'm looking at right now, and then since this is a bear market, this is kind of what it's looking like here. I wish I could draw on that, but I can't. So we have your A wave, your B wave, and right now what we're on right now is the C wave, right? So the C wave is gonna take us, um, it's gonna take us to match this A wave here, because we just had that run to 409. So now it's gonna be exactly like this. It's gonna come all the way back up to 409. So that's kind of what I'm expecting to happen this week. And then you'll have your C wave down, and then you have this dump down, right? We're going to 350. Like it's unless we break above this and we keep going, which is very unlikely because the market shit will be heading down to this big red box that I have drawn. That'll be kind of the flat pattern that um, you'll see play out. So another type of wave, and it does make it a little tricky. You have a zigzag, right? This is kind of one of my favorite patterns because once you find where you're at in this pattern, you get that you can catch that rip at the bottom that just rips up. So this is kind of like where we get, I want to say, a bullish and bearish convergence point is that we do have SPY that kind of looks like this, right? This does kind of look like a zigzag. One, two, three, four, and then you have your A, B, and then you'll have, the rest of your C kind of play out. And this is where this ends. I'm expecting it to end at that 350, right? Then we'll get our wave. Then we'll get kind of like a massive relief wave up. It's more or less just a bull trap before we ultimately head down to 240. Um, trying to think what else. Oh, I get about how we find a bullish and bearish converging point. Now, I actually haven't been able to draw an accurate bullish and bearish converging point only because we've been in full on flush down. So these bullish and bearish converging points, we have a bullish scenario at one point in the week, and then it just kind of gets completely shit on, and it's just hasn't been happening as frequently as it was happening when we were trading up here, because we were kind of like in that area where damn, we're just fucking ripped 50 points, and it's now we have a solid bullish scenario, a bullish thesis that could play out. That's kind of what this 1 through 5 pink impulse wave was. And then we had our massive macro bearish scenario would said, okay, we get that ABC down and we just flush all the way to 240. So this was kind of where we could have those bullish and bearish convergent points, and it was easy because we had a very solid bullish thesis whenever this started ripping up.
Where do you get your 240 bottom?
240 bottom comes from a full ABC correction of the impulse wave. So how can I'll come back here and show you. So when you have an impulse wave, when you have any kind of impulse up, you get, especially once it finishes, you get a full 100% retracement of that impulse wave. So we have a 5 count impulse wave up, and then you get your ABC, and that ABC always takes you back to the very bottom of that original impulse wave. In this case, it just kept going, right? Because um, this was all of wave one, or wave A down. No, wave 1A downs ended all the way down here. So we had a massive like 1A wave down. So yeah, that's kind of where you get that's kind of where I get that 240 price target, because I'm assuming that this was all a 1 through 5 impulse wave, and now we ABC down. And what really kind of confirmed that thesis is getting rejected here at the 618 retrace, right? We kind of shot a little bit above it, which is okay. We didn't start. If we would have broke all-time highs, then I would have said, the bullet bearish thesis is completely out the window. But we got rejected kind of like that almost perfect level to say, hey, that's a fucking B wave, right? So that's where I get that price target from. Now I kind of want to show you how to draw out my favorite plays. But like I said, it's been kind of hard to have a bullish thesis because we've been selling off. And I really love playing bullish and bearish converging points, but I can only get them on an intraday basis. So what our bullish bearish converging point is here. So we'll look at futures, right? I'll kind of show you what it looks like to make an impulse bullish and bearish converging point. So the bullish and bearish converging point simply is you have a bullish thesis and then you have a bearish thesis, and where those two theses um, merge is where you get your bullish bearish converging point. And generally those are pretty like common of hitting, so I really love playing those levels. ABC. So here we are. We have a bullish and bearish converging point here, and this is also a flat correction. Let me just show you what that kind of looks like. So we have a flat correction in a bear market, and this is what this looks like. That is what I drew out here. And it's really nice, like I said, it's really nice to know every single type of pattern. That way you have an idea of where you're at any given time. Like some people, like JP, he doesn't look at the smaller time frames, and I think that's kind of one of his bigger flaws, is because the smaller time frames really do give you an idea of where you're at on an intraday basis. So that's kind of why whenever he does make a prediction, he's looking at like the daily and the weekly chart. Um, he knows how can I say, he knows what's going to happen at any given moment, but he doesn't know when it's going to happen on in the smaller. So his entries are usually kind of shitty, but he does have a basis of where it's going to go. So and that kind of really, I think that really throws him off. But for me, I chart every single time frame. I try to find the impulse wave. I try to find the intraday impulse waves within the waves. It's a lot more work, but it's definitely worth it if you want to make the best plays. So we had a flat correction here, and that's kind of when I was like, okay, guys, we're gonna squeeze at the end of the day, or we're gonna squeeze sometime today. But it didn't happen, and we just kind of sold off, and I was like, okay, here's the last chance for a flat correction. But what I didn't realize is that you can actually have an expanding flat correction, which is where this is what it should have looked like. We should have we should have bounced here. We should have bounced here, and that would have gave us a normal flat correction. We had our A, B, we had our A, B. I want to draw it out. We got our A, B, C. And that's kind of where what should have happened. So because once we broke below that 385, I was kind of like, oh, okay, the pattern's off. But it wasn't, because these can expand a little bit, not too far, but a little bit outside of that bottom right there, and actually still slingshot up. So, in the next over the next couple of trading sessions, I fully expect us to be back at 409. So that's how we get our one of our scenarios. We get the 1, 2, well, no, because this bullish and bearish converging point was thrown off because wave 1 or wave 2 can't fall below wave 1. So I'm going to take out through like a drawing out an actual 1 through 5 impulse wave. So like I said, you have your waves within your waves. And what I meant by that is this is our C wave. We'll use this blue line to represent our C wave. Now we're going to draw out the likely path of this C wave impulse. And it's going to come in and I think it's going to come in a 1 through 3 impulse wave, but we can kind of map out what a 1 through 5 impulse wave would look like too. And this is kind of how I go through the day. Every morning when I wake up and do my every night and every morning when I wake up, just to kind of like map out, and then I kind of adjust it as the day goes on, depending on where the top of the wave is going to be. So if we kind of know where the flat is going to end, which is going to be back at the top before, continuing further down, we'll have a we'll have a real we'll have a real run when I think once we hit that 350, and then we'll get like a nice sized run, and that'll be our big wave 4. Here we are. So futures is kind of climbing here. Depending on, see, we don't know where wave 1 definitively ends, so it's gonna be kind of like guessing in the dark based off of support support areas, right? So what I'm kind of thinking is we had a nice run here. So now we're gonna draw it. We're gonna pull out the fibs. Now we're gonna draw our impulse wave, right? So we know that wave two comes down to the 618 retrace usually. We're gonna draw our wave three. So what I do now.
You're saying where we're at right now is the top of this wave?
Um, no. So I'm kind of like guessing where the top of this wave is because it's hard to figure out. Like, so going into tomorrow, we kind of want to wait for that definitive top of wave one, or else we're just kind of thrown in the dark. So if we don't already have a call position, we're gonna wait for a definitive top. So we don't want to trade it, and we don't want to go long and then it start its wave two down. So this is kind of just pre-guessing where the top is gonna be, just to kind of show you like how it would look potentially.
Which is where we're at, like at the moment, because this is the futures, right?
Yeah, exactly. So this is the futures. So
So you're saying potentially where we're at is where we open and stay?
potentially where we're at is where, since we're kind of reaching, and like I said, I gotta kind of use old supports to try to like make where the potential of wave one's gonna stop. So
Mm-hmm.
since we're kind of reaching like this consolidation area,
Resistance.
yeah. So that's kind of where I would like to see a wave two start because we don't want to see it keep ripping and not be able to get into a position. So if we kind of get that dump here, which would be really nice, we can catch it. We can catch it here. Once we
Like tomorrow, you're
yeah,
saying?
yeah, exactly. Once we get that official rejection here, we can kind of catch it because we know where it's going. We know it's going into the 618 retrace. Usually they don't stop here, and uncommonly they don't stop here, and that kind of gives us like, I don't know if people like patterns or not, but the Elliott wave theory literally maps out. I find it maps out every single pattern possibility, right? So like, if we get a wave two, if we get a rejection here, which would make sense to kind of burn the calls in the morning, and then people load up on puts and they're thinking it's gonna keep going, and then you kind of use your analytical reasoning, say, okay, rejection here, then we get our 618 retrace, that's our wave two. That's where we would kind of like load calls cautiously. We would load calls here, and we would have tight stops, and then we would try to time the rip of that wave three up. And now we can draw our wave three. Since we know it's going to 409, we can kind of estimate where our wave 1, 2, 3, 4, 5 is going, because this is a flat correction. So that means it's gonna rip back up to the top of that A. And then since we're in a bear market, if we look over here to the flat setup, since we're in a bear market, A, B, C, so this was the bottom of B because it was just an expanding flat, even though you can't see that here, it's an expanding flat. Then we'll rip up to C, which will even break us even at 409. For people who like patterns, that's a double top, and then we reject, right? We would probably reject pretty hard off of that, and now that was kind of like that's kind of like the top of our four, right? So four doesn't really get there potentially. So our bullish and bearish converging point at 418 really doesn't get there. We had one try here at 409, rejected, hard rejected. Then we ABC'd. We did a flat correction. Then it's gonna try to go for it again, and it's gonna get rejected. So if you like patterns, that's a double top. We'll draw out our third wave is gonna be here, right? We know that wave three needs enough room not to invalidate itself. So it's going to rip up. I like to draw the fibs out to kind of predict the bottom or predict the top. So we have a minimal. That's what I'm trying to get out. We have a minimal of how high wave 3 is gonna have to go, so we can play based off of that minimal. So if we get a bounce here at the 618 retracement on wave 2, then we have a minimal of how high wave 3 is gonna go. So then we can kind of say, okay, well, we're gonna scale out here because, well, we got to go higher because wave 3 can't invalidate itself. Actually, we have to probably go all the way back to 409 before we can even have enough room to reject. So actually, I might be able to draw out a bullish and bearish converging point here. All right, so we have to go to at least 409 before wave 3 can reject. That would actually be perfect if we get a rejection here, then we have a wave 2, and then we have a wave 3. And now they don't always have to be 3-point impulse waves, so we're going to draw out our bullish. Now we're going to be able to draw out our bullish and bearish converging point. So we can drop our line down to here. We can say, hey, this is our bullish and bearish converging point. All right, this box is our bullish and bearish converging point. Now we either get a rejection here. We can draw this out here like this. We'll say, okay, wave 4 usually find support at the 50% retrace. Now we have our wave 4, and then wave 1 and wave 5 are usually the same length, so that's how we get our next wave count. So how much is that? 129, 28, 27, $127 move. Let's round it up. Alright. Let's see here, right? So wave 1 and 5 are usually around the same length, so alright, so we have a bullish and bearish converging point at 309. And what does this wave count kind of look like, alright? It looks like an inverse head and shoulder. Can you see it? So if you like patterns, the Elliott wave theory kind of goes based off of patterns. If you really think about it, we have an inverse head and shoulder. We have a wave 1, 2. If we get a rejection here, it would make sense. Then we get our bounce here. Then we have a full completion of that flat, that ABC correction, and then we either we get a rejection here, of course, because that 409 was a very hard resistance to get over, as we know, because we got a hard rejection the last time we saw that 409. Very hard rejection. We had a 17. Was that a 17-point drop? So we're gonna get rejected again because it's there's a big what do you call it, supply zone. We have a lot of supply up here, so a lot of people looking to sell once we get here, and we'll get a rejection down to 4, and that'll be another bullish and bearish converging point because our bearish scenario, our bullish and our bearish scenario both says 409, and it also both says where the equivalent of this would be. What is that, 399 for SPY? So that'd be the equivalent. That's how we get our bullish and bearish convergence point. And these, I think, are the best setups to play confidently because you can kind of go big here. You can kind of go big. If we get a bounce here, we can kind of go big here. And then you kind of, you set your profit stop losses and you set your trims at these boxes. And if we get a rejection, then we don't find support here, then we can go big here again in puts and ride it all the way down. Because if we do get a rejection here at if we get a rejection here and we don't find support here, um, it would definitely be wise to load up on the puts. Because in my opinion, I think 350 is coming next. And I've had this box here at the 350 level for a long time. But that's not really the end of wave C though. Wave C ends all the way down at 240. Which makes sense because we need if that was the 1 through 5 impulse wave, then we have to have 100% correction of that, and then we can start moving up to highs, like all-time highs, or we get some kind of government funding and this kind of like truncates itself and we don't get down to that 240. But I think 350 at the least is definitely the possibility, which is kind of why we've been loading up on very long, far dated puts money. So going in tomorrow, we can kind of play that. Depending on where futures puts us at, we can kind of play that downside in the morning and then that rip to the top later in the day, or we just kind of rip once we find that top of that wave one. So, are there any questions about anything?
I'm good. I appreciate your time there.
That's no problem at all. Control this ABC.
Definitely check out those patterns on the left. It makes the drawing of the waves super easy.
Yeah, definitely got to play around with that. That'd be perfect.
Yeah, right there. So if you go down, you got the 1, 2, 3, A, B, C, D, E.
Oh, so it was just regular ABC.
Yeah, there's a regular. I think. Yeah, right. No.
Is that not it?
Yeah.
I'll have to start from the top. Oh yeah, that's beautiful. So yeah, I mean, even if we do get this 1 through 5 impulse wave, we still get ABC. So everything kind of points down, right? Like not even the bullish scenario points much higher than 415.
Hmm.
So and the 1 through 5 impulse wave, and then you have your ABC. If you like patterns, that looks like a head and shoulder pattern, right? That's kind of how That's like what you kind of look for confirmation of your pattern. Like depending on where you're at in the wave count, if you start to see that, kind of looks like a head and shoulder pattern, you can kind of like map out. You can kind of map out the where you're at in the wave count. Yeah, I think that's all I got. If anybody has any questions, just let me know.
Really appreciate it. It's super helpful. How long did it take you to learn this?
Oh, mm, it's always a learning process, so I'm always kind of learning new things. But to get it really down good, it took me about, let's say, a month.
Mm-hmm.
I spent like 6 hours the first time I started learning about it. It took 6 hours, and from like 8 p.m. to like 2 o'clock in the morning, I was watching videos of Elliott wave of other people charting Elliott wave theory because it is really it's an art, and it's very subjective because some people can use it in different ways than others, and and there are people that are a lot more technical than even I am. I kind of keep it simple, and JP keeps it even more simple. And there's some people that um, are very, very, very complex with it too. And I could look at their chart and I'd be like, the fuck is that? So it really depends on how you know, technical and advanced you want to make it. But yeah, I think a couple hours it took me to watch a couple videos of people explaining it a lot and reading websites and reviewing every single type of pattern. And because I mean, there's patterns that I could go over right now, like that would take a long time to fucking video. Trying to find. I wish I saw it the very first time I drew Elliott wave theory on here. I don't. But yeah, you have like leading diagonals, you have triangles, you have that's a leading diagonal. Then you have symmetricals, and you have like so there's a lot of stuff that you kind of that you should I think is very important to know. So you have your triangles, then you have your regular waves, leading diagonals, you have your flat correction, then you have your zigzags. I had to be honest, this is kind of what I see spy in right now is this leading diagonal. Um, and that's kind of why I said like, oh yeah, 350 is kind of where I'd like to see the bottom of this go before getting like a nice um, wave two up. And that'll kind of be like the even more macro than this orange wave that I have. So like I said, there's waves within waves within waves. So this this orange macro was only meant to take us to 350. So what comes after 350 is I'd imagine that we were in a massive zigzag the whole time, and we get that. Then we get a second wave up. So one, two. Well, let me map it out. So this would be one. Like I said, you get a ABC correction of 100%, but so we know that's gonna happen. Now we need to figure out the wave count of what it would look like, of how exactly it would play out. So we know like the broad market, the broad outlook is ABC down. So now we can figure out where we would have our massive corrections. So how I would do it is I'd find so we have one, two, we had to bounce off the 618 retrace here. We look at it, right? So we had that rejection. We kind of went above that 618. So but that's okay as long as we didn't go above that. This would have invalidated the whole bearish thesis. So we were 18 points off of invalidating that bearish thesis, or 16 points. We would have broke back up to all-time highs then. we weren't in a bear market the whole time. So we can kind of play it out, right? The minimum, like I said before, you can kind of use the minimum to find out where the minimal will go to. So we have 1, 2. Now we can find 3 by saying, hey, okay, if we're on wave 3, the minimal that we can go, as long as it doesn't invalidate the wave count, is kind of like here, right? Oh, we can go down to 350 without invalidating the wave count. And this could all just be one massive wave 3 down, which would come in a smaller form like a macro wave, like that. So we're in a massive zigzag all the way down. Um, Down to 350. That's why we're in long dated puts.
You're in long dated puts currently.
Yeah, we have $200 puts. So, yep, we'll get that.
What dated when?
$200 puts for December 30th.
Wow.
Yep. They were $160 a piece. And we're gonna be loading in them. We're gonna be loading more at that 409 area. So once we get that that flat correction back up here to that 409 area, then we're gonna sell off even more. So we're gonna get some long dated puts, and we're gonna get some shorter dated puts for like 380, 390 that are super cheap, but they can go like, I like to call it triple platinum. So they go to like $500-$600 a contract, and we only pay like 90 to $100 for them. So
Like 90 cents per option.
yeah, yep. So here we go. Now we have our wave 3. So the minimum, we could drop to 350. We could go a lot lower than that, but that's kind of like the minimum we would need in order to have our wave 3 to have enough room to correct. So this zigzag would come all the way down here, and then we would get a nice, like, I would say like a 50-point bounce, which would be beautiful if we could figure out where the bottom of this wave ends. That'll be our wave 1. That'll be our wave 3. Wave 4 now. And since we're in a zigzag, that rip will be insane, because at the end of every zigzag is a massive, massive rip. So minimum, we would need to come down to 350. That's kind of why I've had that line drawn there for like ever. And how do we find how long wave 5 is going to be? Well, it's usually around the same length as wave 1. So wave 1, 480 all the way down to 410. So it's at 70 points. So 70 points would be about what, 337. 337. So that's kind of how this is kind of what I'm expecting to happen. So, and and then, this will be like, in reality, this is probably all of wave A. So wave A didn't just start here. It probably ends down here. And then we'll have our B wave all the way back up. Maybe. Maybe. That'd be some massive, massive moves. But
Or we go to zero,
that would be
huh?
insane, huh? would be insane.
Can you explain Fibonacci in like a nutshell? Like as far as I've heard like the different levels have different like importance, or
Um, how can I explain Fibonacci?
I mean like the is it the 6-8, 6-1-8?
Hmm.
Is there is that like the magic level or something?
So for the Elliott wave theory, 618 is, and a lot of people call it the golden pocket.
Right.
So, but for the Elliott wave theory, the 618 either says that we're at the bottom of wave two, or we're at the top of wave B. So I think the Fibonacci is probably the most important tool that you could use for trading, because no matter kind of what you look at, you can play level to level. A lot of people play like individual levels, like for support and resistance, because you know if it falls through one level, then the next level is at the see.
So you just look for support or resistance at each of those.
Exactly. So like if you kind of like if we break through like this 618, and that's the golden pocket. So like and a lot of people call it the golden pocket. So if you're going up like this, um most likely you're either going to get a strong rejection down, or you're going to get a massive push up. That's why it kind of like that area is so big between the 618 and the 786. You have a nice move to the top if you can break through that level. Um, Other than that, I really don't um, know like the definitive meaning to the fib levels. I just know they're pretty important, and a lot of people use them for support and resistance zones.
Mm-hmm.
So if you want to play levels, let's see if I can find like a good example. Find the perfect example. Let's go back to this example. So, like I said, like most people, like if you don't get a rejection at this level, this level, or this level, you kind of like I'm trying to think best way to explain how you could play it level by level. Because for the Elliott wave theory, there's only two levels that you play off of, so it keeps you grounded, so you're not trying to play like 38 to 2.6 or from 2.6 to 100% retrace. So it kind of says, okay, hey, like we only like to play off of the 618 retracement, and a lot of people only play off of that retracement because if you're kind of like moving up towards this 618 retracement, you're gonna get a natural rejection. You're always gonna get a natural rejection off that 618 retrace. But if you're moving down towards that 618 retrace, you know you're always gonna get a natural support. So people like to play it like that. So they know if say if I want to play, if we're going down and I have my fib lines drawn out here at this level, we start getting rejected here. Um, I know I kind of want to play puts all the way down to that 618 retracement. No, let me think. This isn't right. So yeah, so we're gonna want to play puts because that 618 retracement we know is kind of like our support area, and then we can flip the calls here because we know that's going to be a very, very, very natural support because, like I said, the 618 retraces your golden pocket. So if you're going down towards it, you know you're going to get some support there. But if you're going up towards it, you know you're going to get some resistance there. You know
Hmm.
what I mean?
Yeah.
So, um, if you're playing calls and it's moving up towards that 618 retracement, that's kind of where you know to cut, right? You cut or trim or set your profit stop losses. And you set them tight because you could either get a rejection there, great, you're out of the trade with your money and you're not losing any of that money. Or you get a push through and those 1 to 2 calls that you have left to just go, you know, crazy. Same thing with playing it down. So if you're getting you get that rejection here, you say, okay, I want to play puts for a $2 move down for a quick scalp, quick in, quick out. We know that the 618 retracement is kind of like that area where that's going to be like the natural support. So we're going to play puts all the way down to that, set our stop losses, our profit stop losses because we're profitable. And if it breaks through and it doesn't hold that 618 retrace, then those are going to print massively. But if it finds that support, then the support's going to be a massive move up. Does that kind of answer your question?
Gotcha. Yeah. Gotcha.
Okay, good. Do you have any other questions?
I don't.
So that's pretty much the basis of it. I hope everybody kind of learned a little bit about the LA wave theory. I think it is really
Yeah.
the greatest tool I've ever, come across because before I always wonder how people get price targets and how do they predict what, because before I would kind of just be like, oh, if we get rejected here, we're going down, but I don't know how low we're gonna go. But now I kind of have an idea of the price target and LA wave theory gives you every single possible scenario, and that's the beauty of it. That way, if once you have an invalidation of that wave count on a bullish scenario, then your bearish scenario is the only option left. So so I like to look at it as a process of elimination. And I think it's such a great strategy to use for predicting future price action.
So, do you mind? How did you trade before you traded Elliott wave theory?
Mm. Oh, I was using Ichimoku Cloud. I don't know if you ever heard of that before.
Negative.
So the Ichimoku Cloud had kind of strict trading. Uh, see, I can't pull it up. It had very strict ways of there it is, trading. And it was really like it keeps you. Ichimoku Cloud is a very, 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 very good and safe trading strategy for beginners because it gives you strict guidelines of when you can and cannot trade. So, for example, you have this. This is Ichimoku Cloud. This is red and this green blobs. So if SPY is trading below the Ichimoku Cloud, you can't trade calls. So you can't go long here at all. You're not allowed to. That's the premises of it. Let's look at the 15-minute chart because that was literally the only chart I would ever look at. So
Hey man, I got to take off. I appreciate it. Thanks again.
it's no problem at all, man.
Take care.
You as well, buddy. Thanks
All
for
right.
listening. So you have the Ichimoku cloud. You can't trade any calls above below this cloud. That's one of the rules. So if we're below this cloud, then we're only trading puts. So if we were to enter puts here, we would have a pretty nice trade. We have a 10-point drop. You have no excuses to be in calls because we're below the cloud. Right when we get below the cloud, it's all puts. So it kind of takes out that guessing game. Do I enter calls here or do I enter puts here? Same thing here. Breaks below the clouds. And now you have a nice rip down. And you're not in calls because it's against the indicators. It's against the laws of Ichimoku to be in calls here. So now we have a nice rip down. Same thing here. We are in calls here because we're above the cloud. There's no reason to be in puts. Now we have a nice move up. So that's kind of how I traded before, and I liked it because it was very, very, very safe way of trading. And but you took a lot less trades, so you didn't have so not very often. Well, you would wait for like certain indicators to cross. I wouldn't have all these lines on there. I'd only have this red line here. So once we fell below that red line and we were below the cloud, I would be in puts. So you take a lot less trades, but it really keeps you grounded, I would say. A lot of people actually use it still. I should probably start using it again.
I've never seen it. I've never heard of it.
Really?
Yeah. But that said, it's not a huge shock because I've been trading for like a year.